Here we will see the typology of public finance intervention in support of sustainable finance. So previously we saw in these slides like how some changes have come across different countries, different regions on different SDGs in multiple ways, right? So what are those interventions possible because of financial intervention in this whole a system. So that is what is laid over here. This is the source, UN environment. Okay, so on this side we have mechanism enabling environment, and on the second side we have financing risk sharing. On the other hand we have support area, so financial sector, real sector, so overall there are four quadrants coming over here, 1 2 3 4. So we'll see the first one. Here we have like a matching grants. Okay, so financing and financial sector, if it matches, right? So matching grants, guarantees and other risk sharing instruments, long-term credit lines, innovative transactions, government investment guidelines like central banks, pension funds, etc. Like long-term, like NPS, you may be aware of, RBI in Indian case, and so on. Tax advantage provisions for financial instruments. So these actually things, fall under this quadrant 1. Quadrant 2, in the real sector we can have grants, R&D subsidies, tax exemptions, national procurement policies, direct fiscal stimulus. The third quadrant we have 2, capacity building for financial sector stakeholders and data provision. The fourth quadrant we have development, dissemination and training on disclosure rules and other standards related to sustainable finance and capacity building. So what are the key considerations for developing principles of sustainable finance? So that is elaborated over here. System wide, if you see, there are 2 points. Make a statement defining the long-term objective of the financial sector in the context of sustainability. Okay, so long-term objective, keeping sustainability like a context in mind, for the financial sector. Second, agree on an approach to incorporate sustainability considerations to ensure the effectiveness, efficiency and soundness of the global financial system. Okay, so ensuring effectiveness, efficiency and soundness of global financial system, like SWIFT, you may be aware of, is one actually like a transaction exchange, like a medium. Okay, and these World Bank and several other regional banks we saw, those are working at different regions to support these. Well, this is just like a transaction facilitation, like this thing, but it also helps in actually moving the funds from one place to another, like one country to another, right? So you may be aware of there are some global currencies dominated by US dollar and many others, right? So the international exchanges actually happen using those currencies. But lately, yes, there are other countries and their currencies are also being accepted internationally. For example, you may be aware of like India is now paying in rupees for its oil imports to different countries, right? So that is a good initiative actually. At world level there should be multi-currency a system should be in place, so that every country gets the equal opportunity and access to these platforms. Further, on the disclosure, we have established approaches and methodologies to disclose the sustainability impact, opportunities and risks arising from financial sector activities, as well as the sustainability risks affecting the financial sector. Second point, consider including sustainability information from the financial sector into the policy making process to ensure that both the financial sector and the other relevant sectors, for example environment, education and so on, are directed towards sustainability objectives. So policy making process, so the overall the focus is towards these goals, where the funding or the policies which are going to get involved with that funding get along with the overall a long-term objective of achieving sustainability, right? So preparing all of those policy making processes in sync with that. Third head we have here business practices. Price sustainability impacts, risks, opportunities and incorporate them into the financial institution strategies, governance and business decision making processes. Develop transition plans towards sustainable finance with financial institutions identifying activities to be increased as well as business lines that need to be reoriented towards sustainability. Okay, so business lines that needs to be reoriented towards sustainability, right? And then financial institution strategies, governance and business decision making processes, etc. Yeah. The next point we have of financial instruments. Agree on criteria to identify financial instruments and specific transactions aligned with sustainability objectives. Define mechanisms to promote innovative financial mechanisms, including through active regulatory encouragement to increase the depth of sustainable financial markets. Next point we have collaboration and alignment of efforts. Develop mechanisms to promote and allow collaboration and sharing of information between financial sector participants on approaches, methodologies and business practices for sustainable finance. Lastly, seek alignment of international and national policies, standards and results measurement to ensure consistent global approaches that fit national needs. So some of the countries and their roadmaps, so we can see over here on the last column we have policy objective anchor. So what is that anchor which is holding on to this like a roadmap? So it begins with Brazil. Build broad coalition in support of sustainable finance, close coordination between government, policy, financial regulators, public financial and market actors, right? So the overall policy objective here is economic growth and financial markets development. Second, China, strong public policy guidance, foster reallocation of resources towards green activities through a broad set of channels, capital markets, banks, etc. Overall objective here, green financial systems to support green industrial policy, right? Because you may be aware of China has the like a largest manufacturing base of the whole world. Okay, so well that translates into the highest like emissions and consumption of energy and material resources, etc. alongside waste generation. So that actually should like a move slowly towards green industrial like solutions. Then we have EU, move from deployment of public finance to policy measures tied to risk management and disclosures. Objective, sustainability as a driver of a sound financial system. Third, we have India, tie financial measures to policies in sectors particularly relevant to sustainable finance such as energy. So, well, India's emissions are also very high, but per capita emission, if you see, is very low. It is much like a lesser compared to the world's average. Okay, so fairly if you see, India is doing wonderful per capita wise, but yes, like more savings the better it is, right? So definitely we can definitely strive for like improving whatever infrastructure we have to the more greener infrastructure for a better tomorrow. Economic growth with emphasis on renewable energy. So you may have noticed in the recent years and decades, like there is a huge emphasis on developing solar farms, wind farms, etc. Okay, and going for like a renewable energy resources. Morocco, link sustainable financial to strategic financial development objectives. Objective, develop financial markets. Russia, establish public-private partnerships to trigger development of specific markets. Okay, with an objective to targeted markets development. Okay. This is sourced from UN Environment. You can look for more details. So in overall, like this financial, like a system, sustainable finances, like a system, how it touches, like a different aspects. So you can see, of course, like ESEs are here. Okay. And some more like SDGs, which may be beyond, some targets may be beyond ESEs. Okay. So inside particularly like environment, we have climate change mitigation. We have climate change adaptation and other environmental like factors and issues. Okay, so this one focuses on low carbon, this one comprehensively like talks about the climate. Okay, this one if you include all three, it becomes like like a green this thing. And of course, like we know, like overall like covering like these ESEs, okay, formulates like a sustainable like a solutions. So similarly, sustainable financial system, right, which serves equally to all three aspects, right? So this is adopted from UN Environment Inquiry 2016. Yeah. So now coming down to some numbers, like urbanization, number of cities in low developing countries in year 2000, 2015 and 2030. So at a, like a gap of around 15 years, from each, let's see, particularly only to the LDCs, low developing countries. So 17 cities here, which grew to 30 cities, in this range, and 71 cities it is projected that it's going to be by year 2030, right? So the population, like you can see the cities, like a range 0.5 to 1 million, like 5 lakhs to 10 lakhs. In year 2000, like LDCs had 21 medium-sized cities. By 15 it was 30, and by 2030 it is expected to be around 46. So you can see like how, like it's multiplying, right? It's multiplying more than, like 100%. That is the rate we see like our, like this range, right, from year 2000 to 2030 in a span of around 30 years. Okay. On this scale, there was just one large city, like inhabiting 5 to 10 million, like people. Okay. By 2015, there were around 3, and it is expected to go, like to 10 large cities, hosting 5 to 10 million inhabitants. And one mega city scale, like a 10 million, or more, right? 1 crore plus. Okay. So there was just one, but by 2015 there were 2, and it is expected that there will be, like a 4, right, where 1 crore plus people will be living. This is only about LDCs. So you can see the concentration of population in LDCs is also getting, like a very high, more than, like a 10 million, like a plus at one place is a humongous task to, like a manage and provide resources, right? So how this whole financial management, like a cycle works in the public, like domain. So here we have the government in the center, like managing all of it, and then it starts with the public, like a policy development. The parliament, the governments, and the state governments, central governments, they frame, like these policies. Okay, accordingly it comes to the budget formulation, like you may be aware of every year Indian government actually presents its annual budget, okay, based on those policies, whatever the priority areas for the like a government to work on, for the next few years. Accordingly they allocate, like funding and resources. Yeah, and then it goes to the budget approvals, then it goes for implementation, execution, etc. Then accounting and reporting, taking, like a stock of what is going on, what is happening, how much, extent it has happened, etc. Auditing, etc. Then it comes to the final external auditing, right? So in Indian scenario, you may be aware of CAG, Comptroller and Auditor General of India. Okay, and there are many other auditing agencies, independent auditing agencies. There are international auditing agencies also, okay, for certain things. Okay, and then again, from there, like they take the total stock of the situation. Then CAG also presents a report, to the government, like about its findings, like a corrections, suggestions, etc. And then again, which becomes an like an instrument in helping, like a further, like a newer policies, refined policies, etc. And the cycle actually goes on, right? So similarly, it works in multiple, a lot of countries, more or less in the similar fashion. Overall, national financing mechanisms, how it works. So here we have this national financing mechanism. So it has, like a financial institutions, and it has financial markets. So two components. And in financial institutions we have banks and non-banking institutions also are there. In banks it goes to commercial one, non-commercial ones. Okay, so this gets divided into two, like here we have majorly like banking, like a sector, banking related. And then on this side we have financial markets, so open capital markets, other financial markets. In capital market you can go through, if you are aware of, like a share, like a bazaar activities, or how it transacts its like transactions. Okay, so you may be aware of about bonds, equities, and other like instruments, which like as an individual, you can buy, or you can also participate. companies actually raise like a funding from the market, right? The investors, common public or even large financial institutions, they invest, right? And it builds up the whole like a financial market situation, right? That in turn helps investing into infrastructure project, development projects, and projects of multiple varieties, okay, depending upon the focus and objectives and like schemes, okay, which further helps the other side actually helps like a financial markets by making like a friendlier policies, safeguarding like their investments, like minimizing the risks, etc., etc., right? So this is how national financial mechanisms actually work. So you may be aware of the apex like a financial institution in the body is RBI, and under RBI there are like a banking institutions like led by public sector like SBI, and other like a private sector banks, there are many, okay, just to name a few. There are some non-banking institutions also, you may be aware, like NABARD, right? And many others which work for the development of the country, but particularly to some like a specific sectors only, like this works for like a rural development, NABARD, right? So it lends also like money, it helps in infrastructure projects, it helps in execution like some plans, schemes, etc., etc., right? So and similarly, like I gave you example here. So again, RBI controls like these institutions also, but here like one of the major controller is like a SEBI, Securities and Exchange Bank of India, okay, and SEBI actually takes care of like transactions and like things in financial markets, right? So this works as the like a main like a controller over here, right? So this is how collectively the national financing mechanism works in the Indian scenario. Similarly, there are like agencies in different other countries also on the same lines. Variations of PPPs and distribution of risks, okay. So here if you see, there are two poles, pure public, okay, and pure private, okay. So scale and scope of responsibility and risk for different PPP contract types. So here we have, if it is pure public, okay, the degree of public sector risk on this side is very high, okay, and public sector risk on this side is of course low, because this is not like a public sector activity. But yes, private sector like a risk is going to get like a very high on this side. Yeah. So in between like existing assets, if you see, we have service contracts here, management contracts. Then in between we have like PPP types like operate, maintain. Like you may be aware of like such formats these days coming up. For example, managing like a toll gates, managing maybe highways, managing like railway stations, managing airports, right? Multiple like such initiatives were actually taken up in the recent years, and there are many like like operations going on across the country. Lease, operate and maintain, like this is also one like this thing. Then giving some concessions, then it comes totally into the like a private area. Total privatization or like regulations, etc. Okay, then again in the new assets, if you see, this is about existing assets. New assets, construction contracts, turnkey contracts, right? Totally in the like a public sector, and related arrangements. And here we have these five like a green ones, which talk about design, build and maintain, design, build, operate and maintain, design, build, own, operate and transfer, design, build, own, operate, and then licensing and inauguration. You totally own in the private sector. Okay, so you can see now there are like a multiple like a segments which have like a come up in this like a whole like a spectrum. So from fully public to fully like a private, okay, there is a provision of like having some very degree of like this arrangement. So not 100% public or not 100% private, but it is possible to have maybe 60-40, 50-50 or 25-75 or maybe 10-90 or whatever, right? So this like a thing is possible, and there are several like such examples. Okay, so this is also a new like a phenomena in the recent decades. Now we will see about FDI's flow, foreign direct investments, FDI. So here global foreign direct investment inflows 2015 and 2018 to 22, okay, in trillions of dollars. You see this humongous, like a currency unit, like a taken over here, okay. So in this one, if you see, it peaked at 2 trillion, like a dollars, around year 2015, okay, and then it started actually coming down. So here you see minus 60%, it came to 1.5, like a trillion dollars, okay, by year 2018, and in 19 it grew little bit, okay, but still, like a like a 40%, like a fall you see from here, trough after global financial crisis of 2019, okay, 1.2 trillion dollars, like is the volume given over here. By 2020, it is like here, close to like in the range of 1. By 2021 it is touching, like its lowest point here, close to around point, like a 7 or so, and then it is expected that 2022 it's going to rise. But yes, there is, like this range also, which is, like a projected. So you can see there is not one actually like a frame, but it's a range. It can be anywhere, from this to, like this, okay. So this is this like a forecast. Yeah, so what has impacted, like these businesses, in that COVID is one of the, like major ones in the last like 2-3 years, okay, and how much it has kind of impacted, that is given here in percentage numbers, okay, impact of COVID-19 on business operations by company size, right. So you can see here the second column, micro scale industry, small scale, medium sized, and large scale industries. And the color notation, red strongly affected, yellow slightly affected, green moderately affected, and blue no effect, okay. So in the micro, if you see, strongly affected has the largest share, like from, like this range, almost like a 60% of this entire, like a range is strongly affected, right, 60%. Then we have moderately affected here by green, then slightly affected, by yellow, and no affected, very few. I think it should be, if this is 5, maybe close to 2.5 to 2.5 percentage only are like not affected. Rest are all like badly affected. And in all of these columns, if you see, this not affected actually range is more or less like similar, okay, volume wise. But gradually, if you see, strongly affected share has reduced, in the large, like industrial, like a sector, large business opportunities, like this thing, right. Yeah. Then we have, like some government measures, like perceived as most helpful in this scenario, right. So you can see, and you can observe the percentage also, this is a, like a surveyed, like a response, which is, like a summed up over here, source International Trade Center, okay. So tax waivers or temporary tax breaks, 56% of, like a survey respondents, they have suggested this, and very close 53%, have suggested for financial programs such as low interest credit guarantees, etc. Then rent subsidies by 35%, support to self-employed people 30%, employment programs, temporary unemployment programs or social security waivers 29%, close to 1/3. Okay, and then we have 24% reduction of tariffs on imported inputs, cash transfers 19%, and others overall in 7% target. So how this whole like a capital market ecosystem works? So you can see we have regulations, regulatory bodies coming at the top, okay, and they deliver this information sets that goes to the issuers, okay, and from here it goes to the instruments, back to the investors, then again it comes, like, and forms this loop. In between we have intermediaries, infrastructure, exchanges, clearing and settlement systems, payment systems, depositories, etc. Well, intermediaries, if you see, investment banks, brokers, dealers, etc. So regulatory, like a framing laws, regulations, controls, listing, disclosure standards, supervision, and related institutions like RBI and like a SEBI we spoke of in the previous like a slide, right? Then for information, analysis, rating agencies, audit firms, etc. It goes to the issuers like governments, municipalities, companies, financial intermediaries. Then instruments, like one of the examples of instruments is the bonds, right? So sovereign and non-sovereign and equity as the two main instruments, but other instruments also exist like money, market assets, etc. Investors, global and local institutional investors, pension funds, insurance companies, financial intermediaries, mutual funds, individuals, etc. Global Humanitarian Response Plan funding gap 2012 to 20. So here you see it is rising. We have requirements and green in for funding. Okay, so requirement stood in year 2012 at around 7.5 something, and funding was like in the tune of 5, and gradually if you see this like a gap is widening. Okay, ideally this gap should be like a bridge, there should not be any gap. Okay, rather like funding should be like available in surplus, whatever your requirement is, we have enough funds, like that kind of situation should be ideal, but that is not happening. If you see this like a gap is rising. Okay, so lesser and lesser funding is now available for more like a needed humanitarian responses. So figures you can see, which is given in billions of US dollars, 2018 constant price. Okay, so in 2012 the range was 5 to 7.5, and year 2020 it came down, it came up to here. This is around 17 here to around 38 or something, right? Yeah. So this is this range.